Okay, here we go. And welcome, everyone. Thank you. My name is Kenny Simon with you from Bretton Academy, or better known as the Bretton Financial Trading Academy. Today is the 14th of December, but we are having loads of repeated or recorded sessions as well, together with all that we are actually sharing at this moment of time with regards to signals and various others. So this session will actually be quite different, and the session will actually be including a bit of my strategies, but most importantly, a trade plan that I have actually been trading with for more than 12 years of my trading life, and I'm still practicing trading with my PRICE, or the price trade plan. So I want to share with everyone today a little bit different in terms of our Wednesdays webinar, whereby we always look at midweek review, but I want to actually demonstrate to all of you the way that I actually pick the right pairs, as well as going through the trade plan while I am actually analyzing, researching the market based on the price, or PRICE trade plan. So this is a very, very essential practical trade plan that allows you to actually pick the right pair for the day, and then to do a trend analysis together with a technical analysis right after we have done a fundamental analysis. So usually what happens is that most traders, they sort of overly rush into technical analysis, and sometimes, or most of the time, it only becomes technical analysis, and then it's overly weighted for most of the traders, only conducting the price, not the price trade plan, but actually jumping the gun from maybe not even step 1 straight to step 5. So hence the reason I want to demonstrate the practical application of my PRICE trade plan, and then I'll demonstrate as well my self-found strategy called the geometric pattern. It's a pattern strategy that I've been using all throughout my trading career as well. So this is where I would actually be helping and assisting most of the traders to understand how we are actually applying the price trade plan. So the price trade plan has got a step-by-step approach, but most importantly, every letter of the word price is actually a step, and every step has got a collective chosen or cherry-picked strategies or little techniques that I have actually devised myself, or basically tweaked from my years of trading in the Forex market especially, or even the financial markets in general. Okay, so that's mainly what we are actually doing from a day-to-day basis at this moment of time, where we trade based on the PRICE trade plan. So let's start. So the price trade plan is really a collective step-by-step guide to actually know what you guys are supposed to be doing before deciding to actually trade. So we usually start off with step 1. Now, step 1 is your P. The letter P in the PRICE trade plan stands for the psychology of the market. So what what the psychology of the market stands for is basically the trend and the sentiments of the market, meaning the feeling of the market. So this is really important for us to understand the feeling of the market, meaning, are they actually in greed mode, fear mode overall? Which country are actually experiencing what kind of mass psychology, for example, sentiments of the market, whether it's a risk-off or risk-on environment, whether the investors and traders are actually at the moment, majority are having a risk-on environment. If it is a risk-on environment, that means they are willing to turn on their risk appetite. So they are more risky, maybe more greedy as well, driving the market further up. But that also means that if they are in a risk-on environment, that means that they would most probably be going on to or investing into risky assets. So that is where we see an environment where gold wouldn't actually be, the interest wouldn't be in gold or CHF, or CHF is Swiss franc, or your JPY, which is your Japanese yen. So this is when we see a risk-on environment. So how do we actually do that? It's actually quite simple. We use some free tools that are available in the market and certain websites that I would recommend as well. And we want to use these free tools to actually just get a bit of an idea of the interest in majority of traders and investors. Then this will then help you understand whether it is a risk on or a risk off environment. Risk off basically means that they are turning off their risk appetite. Okay, so they want to actually become more careful, and they want to put their money into safe havens. And safe havens are assets like gold and silver, of course. And then you've got, in terms of currencies, these are safe haven currencies, does actually include the JPY, which is Japanese yen, as well as CHF, the Swiss franc. But nowadays, because of due to COVID as well, a couple of years ago when it first started, 3 years ago, this is when the dynamics of certain currency have actually changed. For example, like the US dollar. So the US dollar, when it comes to risk events that are mostly revolving the COVID, as well as now with the Ukraine and Russian warfare, this has actually increased the appetite for US dollar as a safe haven as well. So the dynamics have actually changed. Now the US dollar together with CHF, which is a Swiss franc and Japanese yen, has now become the chosen or preferred currency as a safe haven currency, the US dollar. Okay, so this is where we want to also understand how this dynamics that have actually changed would actually impact us choosing the right pair to trade for the day. Now, one of the biggest challenges that traders face nowadays is actually not analyzing the market technically, because they know this quite well, right? Technical analysis is a lot of information, more like overload of information on technical analysis, but they actually struggle in picking the right pair to trade. The reason for that is because they're jumping the gun too fast in jumping straight out of bed into the technical analysis or into technical charts. And that is very, very, very dangerous, because if you are not aware of what happens in the beginning, let's say fundamental side of it, you know, the fuel of the market, in my opinion, is the fundamentals, the news, risk events, announcements, interest rates announcements, anything that you find that in the economic calendar that are categorized as medium to high impact, especially, are actually to watch out for, because these does actually increase volatility. So volatility is highly important for us to understand whether the market has got volatility and liquidity, because volatility especially is the lifeblood of the Forex market. So hence the reason for this price trade plan. So we start off usually understanding, using some free tools to understand what is the psychology of the market in terms of trend, in terms of sentiments in the market, in terms of top movers for the day, for example. So it's quite simple. So we start off with step one, which is the P. It's got various other P's or sub P's under the letter P. So you've got psychology of the market, you've got picking the right pair, for example, you've got price patterns, you've got various other P's under just the letter P itself. And every one subject or topic under the letter P has got its own ways of approaching the market with certain strategies, tools, as well as techniques. Okay, so there you go. So that is step one. Now, step two would actually be a risk to reward. You would need to understand, that's why we have a lot of discussion with our traders as well, with the mentors, just to understand how much are you willing to risk, in terms of US dollars, and how much are you willing to risk in terms of pips as well, in order for you to understand your lot sizing. So your lot sizing is really important because of the match between lot sizing with what you are willing to trade with, or in other words, your equity, your capital, your capitalization is really important. So one of the reasons why we have got traders jumping the gun from just out of bed and then straight into technical analysis and then losing consistently as opposed to profiting consistently, is that they fail to realize that when they do the technical analysis or conduct the technical analysis on certain time frame, it has to actually match with the equity or the capital that they have. If you are a trader and you are a newbie, for example, and you start off with $100 and then you are not guided properly in technical analysis based on bigger time frames like the daily chart or the 4-hour chart even, and with that $100, it could easily wipe out your account just based on where you are actually conducting your technical analysis on which time frame, and where in which time frame you are making that financial decision to actually trade does actually could actually be a risk or not onto your trading capital. So this is where I find that the struggle usually is at that area where they fail to realize, and then suddenly their account just gets blown out, you see. So that is where it is really crucial to match between your capitalization, your amount that you want to deposit or have as your equity to trade, with how you are analyzing the market, especially technically. So that is where they get it wrong when it comes to step 2 with the risk to reward ratio, your lot sizing, everything that has got to do with risk and money management. That is where step 2 needs to come in to actually measure your risk. And there are many ways for beginners, intermediate, advanced. There are various ways to actually adopt simple formulas depending on your level of experiences and your capital that you have in terms of your equity to trade. Okay, now then we go into step 3. Now step 3 is actually, it stands for insights and mentor guidance. What that means is that you would need, traders would actually need to always confirm the psychology of the market together with what they are analyzing with a mentor, because then they would actually be brushing up their whole, trade plan, as well as their strategies and the way they actually approach the market. Excuse me for that. I'm just going to get a drink of water. Okay, so this is basically a very important area for communications between traders and their mentors. For example, like myself, I'm a mentor, over 15 years of experience, and whenever we have got traders going through the PRICE trade plan, when they are into the P and R, then they can come back to me to confirm about the market, for example, because there are a lot of insiders information that could actually, certain events could actually happen overnight. There's some, sort of hidden type messages in certain type of events, for example, geopolitical events, some secret meetings going on in different places. So we at the Bretton Academy has got some research capabilities using some tools that we are collaborating with, some researchers, as well as news anchors as well, that would actually be giving us some very clear information about, price of gold, for example, geopolitical event. Maybe there is a group of politicians and bankers having a meeting on Sunday night in Japan, for example. We would actually be getting that kind of information in order for you to understand why the market jumped as it did on Monday morning, sometimes with no events as well. So, but these are events that are not available for the the general public to actually know. So it is really important for us to get some insiders information from your mentor, or even mentor guidance. That is where step 3 is really important. And step 3 is also very important in the area of check listing whether or not you have actually conducted a proper research and analysis based on the pair, or even whether or not you have picked the right pair to actually trade. So step 3 is really a guidance, insiders information, but also to keep you on track that you have actually done step 1 and step 2 properly. So this is really very, very important. Now, after we have actually done step 1, 2, and 3, then we go on to a confirmation area. So the confirmation would actually be involving a trend analysis, and then your further technical analysis, and you want to look at support resistance levels, for example, the right price to actually enter, an ideal price to enter and exit. Everything would actually be then checklisted to make sure that you are going to make that financial decision in trading correctly and properly. Okay, so in order for us to reduce our risk but increase our probability in hitting the take profit for yourselves. So that is basically it. So right on the right side, right here, it's got some summary in terms of what we actually do in each step. So each step, if you go through each step, what would actually happen inside of you is that you would actually be making your own hemispheres of your brain really busy. Now, when you're really busy and you've got all these neurons in your brain doing different things, they communicate from right to left, left to right, vice versa, then this would actually make your brain really busy in order for you to be really busy and not go into your emotional side of it. So this is where it would actually help you, if you do go through the price trade plan, to be more focused, patient and disciplined. So this is the reason why I'm actually sharing my PRICE trade plan to all the traders out there. So this is something that would actually help you a lot. It wouldn't be taking you hours to actually go through the price trade plan. Of course, with practice, you're able to actually go through the price trade plan in under 20 minutes. And that's all you need actually. But what would that do for you is to encourage you to be more patient, focused, and disciplined, of course. But apart from that, to actually sharpen your skills in analyzing, researching the market. But most importantly, you've got all these strategies as well as knowledge in the market to actually understand and dissect the information together, properly, in order for you to actually make it the fuel of the market before you actually go straight into technical or trend analysis. Okay, so that's it basically. I just want to give you a bit of a feel and a taste on the price trade plan, and then now we will go straight into action into how do we actually conduct your step 1, your step 2, your 3, 4, and 5. Okay, 5 is your execution, of course, and that is your last decision making sort of step. All right, that is actually execution. So you're clicking onto the button after you have actually gone through step 1 right up to step 4. Okay, so that's it. So now I'll share with you as well on certain strategies that I have copyrighted, and one of it is the geometric pattern strategy. Now, the geometric pattern that I have came up with the past 7-8 years ago is looking like this. It's like a lightning bolt. It's not my own originally. It derived from the ABCD pattern. It seems to be quite accurate as well. I basically tweaked it from harmonic patterns, chart patterns, but then I've taken the ABCD pattern in order for us to be able to actually enter the market, exit the market as well using this pattern. And the pattern would actually be part of the PRICE trade plan as well. Okay, so this is where it would actually be, quite interesting to actually look at how do we actually spot, draw, and also trade the pattern. So it's derived from a pattern called the ABCD pattern, like this one here. Then I have sort of invented that one straight line from A to D, and that makes it a geometric pattern because it's made up of 2 triangles as well. So this is something that I have actually planned out. How do you actually trade the geometric pattern? And usually patterns like harmonic patterns and various other patterns, they don't have a clear plan of entry. They do not actually have, risk levels, for example, and how do you actually trade it step by step. So on a on a MT4 MT5, you would most probably be looking like this, but we shall go into it in action shortly. Okay, so for now, the best is for us to actually discover some free tools on certain website, and one of the website is actionforex.com. It's free, it's not a broker. I've got various brokers on there, of course, but then our focus should actually be on using some of the free tools, and I've been using it for many years already on the market section right here. So if you click onto markets, you'll see that we've got some free tools. Now, the tools that we are actually going to be using today, or most of the days, are only a selected few, and that is one of it is we'll start off with the top movers. Now, the top movers is a very interesting tool. It just gives me an idea of, or it will give the traders the idea of which currency pair are actually focused on quite a lot throughout today, right? So we want to focus on building up of momentum and interest by traders and investors onto which currency pair. This is a currency pairs type top movers, okay? So you don't see gold on there, silver and all that, but then it gives you an idea of whether or not the risk sentiments or the sentiments of the market are focused on safe havens or not safe havens. Okay, so this is one of the ways to actually use it very simply, is to look at the pair section right there under the word pair, and to look at which currency first, not currency pair, but which currency in that what do you call that column right there from 1 to 10, which currency are actually mentioned, or which currency is mentioned the most. Okay, so we pick up one. Let's say here we've got JPY here, JPY here, but NZD here, some more JPY, some more NZD. So from the look of it, just visually, we have got two currencies that are appearing the most from 1 to 10, and these are NZD and also JPY. Okay, so NZD is also at the first level right here. Now we want to look at the change percentages right here under the word change, or CHG. We want to look at what are they actually doing in terms of selling and buying, but we are not actually picking that pair just because they are selling or buying. We just want to know what have the traders and investors done for the past hours, for example. So we want to look at the symbol right here. Now, it's negative here. That basically means that majority of traders, investors have been actually selling the NZD and buying the JPY. So if they're actually buying the JPY, if most of the JPY crosses as well, it's into the buy of JPY, that it is a safe haven. So because it is a safe haven, that basically means that it is a risk off environment out there. So there's a risk in Asia probably, because usually if the safe havens interest in buying safe havens are in the euro side, let's say there's a risk in euro, in the eurozone, for example, COVID within the eurozone, then we would actually be seeing the interest of traders and investors buying the Swiss franc, which is the CHF. So that is a bit of an indicator for us to understand that traders and investors are being a little bit more safe. They want to feel a little bit safer. They want to actually be a little bit less risky. So they choose CHF and they buy CHF. So if there's a lot of buying of CHF when there's something happening in terms of a risk event in Europe, then you get a sort of an idea that it is a risk-off environment happening in the Eurozone among some of the countries within the Eurozone. So that is really important. So for now, just from the first line itself, gives me a bit of an idea that if they are buying, most of the traders, investors are buying the JPY, like what we can see here as well, they're actually selling because you've got a negative symbol right here. They're selling the USD and then they're buying the JPY. And we move to number 4, CAD JPY. They're selling the CAD, they're buying the JPY as well. And then if you move forward with the other pairs, they're all selling the other currency and they are actually buying JPY. What that means is that they may be, this is just a guess, but we can always Google it, we can always find news and everywhere else, whether or not there are some risk events happening in Asia or in Japan itself. Okay, or there may be a reason why they're actually buying the safe haven JPY. So this is a very, very important sort of indicator of gold as well. So if they're actually, if there is an event, especially a risk event, something has actually happened to create fear, and then investors and traders would then be collecting their investments and putting them into safe havens, that could also mean that gold would have a chance to actually go up or be more bullish as well. So this is how we connect the dots. And before we actually go onto the charts, this is what traders should actually gather all these kind of information to be sort of like a detective in the market, to understand how do we actually then pick the right pair in order for us to actually do a trend analysis first. So I'm just going through all these steps at the moment of PRICE. So there's an invisible steps, but then I'm going through these steps at this moment of time. Okay, so NZD-JPY, we have got only 3 dots right here. Now we are looking for 4 dots. Now, if we've got 4 dots, that basically means that in this case, USD-JPY is giving us some clarity in terms of trend. Okay, so if you've got if you've got all 4 dots right here, that basically means that USD JPY is quite clear in terms of its trend on the 4-hour, daily, weekly, monthly, but not to actually buy and sell as yet. We're just about 10% of the entire process of the PRICE, because we need to actually understand that we are just looking at all the tools as well as just lagging as well, and they're not 100% accurate. So we shouldn't actually be using any tool as a standalone strategy and just based on that one tool. We need to actually combine some tools in order for us to sort of spread out the risk of inaccuracy, because the accuracy only comes from your own analysis of the trend, which I will then show you later on after we've actually picked the right pair to actually trade for the day. Okay, so here I would actually then write down in my little notebook, or you can always write it down in your trade journal, but I want you to, I would love for traders to actually be writing down their observation for the day. So the observation for the day could actually start off with the top 10 movers, and the top 10 movers would then be giving you an idea which currency is appearing the most from 1 to 10. So here we have got the answer NZD and JPY. So NZD is classified as a commodity currency. Now, commodity currency like NZD, especially with Australian dollar, they sort of mirror each other's move, but the main reason for that cluster of NZD and AUD is the correlation between them. They are positively correlated, and they do actually rely a lot on what goes on in China. So whatever that goes on in China, whether it is a negative sentiment or positive sentiment, that would then be positively correlated to both Australia and New Zealand. Okay, so then it would actually impact New Zealand dollar and Australian dollar. Now, both Australian dollar and New Zealand dollar are actually considered to be antipodian currencies. These are their nicknames as well. So sometimes when we go onto the news, we see that the headlines, antipodian currencies doing badly, or bearish or bullish, so things like that. So now, talking about bearish and bullish, we have just got some news as well that are talking about another animal, the wolf. Now, we always talk about the bears and then the bulls, right? Bullish and bearish. Now we have got the wolf. Now, the wolf is not a trend, but the wolf is actually inflation. So nowadays, we would probably be hearing about the wolf is here to stay. So that basically means that inflation is here to stay. So it's a bearish market, but the wolf is in. So this is basically what's been going on in Wall Street and various other, publications as well, mainstream media talking about all this. So in case if you, hear the word wolf, don't think that it's the wolf of Wall Street, but it's actually the wolf that indicates the current situation, that is the biggest current situation that's going on in the whole of the financial market economies as well, which is inflation and the rising interest rates that is basically, impacting the market everywhere, especially because of the war between Russia and Ukraine that's still going on, that has actually sparked off a lot of, unexpected dynamics between interest rate as well as all the decisions that are made by central banks. Okay, so there you go. Now we have got USD JPY here. So now we have a little bit in our minds that we need to actually pay a little bit of focus on both NZD and JPY. So then we can actually move on to the next tool, which is a currency heat map. Now, the way I'm doing this is just to help you understand it a little bit more. But then, of course, this can be fast forwarded, and you can actually, with practice, be looking at each one tool for just 1-2 minutes, and then being able to actually understand the trend, understand which currencies to actually pick in our minds in order for us to look at which pair to actually pick to analyze further as well. Okay, so there you go. This is it. So we have got a heat map right here, gives you an idea whether or not it's dark blue or dark red. Now, the dark red, dark blue would actually be better because they are, strongly bullish and strongly bearish. So if it is dark blue, we want dark blues in all columns. So I'll do more tutorials as well to give you a bit of an indication of how you actually use a heat map. It's really simple. All you need to do is to look for columns under each currency. For example, you want to have a standard column that are all dark blue or dark red. Dark blue means strongly bullish. Dark red means strongly bearish. So for example, we look at JPY. Now JPY overall, we see a lot of blues, right? So a lot of blues compared to reds, or green is neutral, but a lot of blues, and the more darker blue that we have, the more it is telling us that JPY is picking up in its bullishness. So overall, JPY is quite bullish, but then in order for us to pick the right pair, we need a column that has all dark blue. So for example, if we were to have JPY against USD, to have these two blue ones, just blue only or light blue, to turn into dark blue and dark blue, then we would actually have 4 rows that are actually of dark blue, and that entire column will be dark blue. If we've got all dark blue, that basically is a sign or a signal that the trend could actually be on the upside for JPY. So downside for the USD, obviously, but then we want to then do a trend analysis, pick that pair to do a trend analysis on our own in order for us then to decide to actually trade it and do a technical analysis with it. Okay, so this is how we pick the right pair in a way, in order for us to be at the right side of the market. So at this moment of time, what we can actually then do is to look at both the JPY and the NZD crosses, especially JPY crosses and NZD crosses. Why? Because on the top 10 movers as well, we find that this is where investors and traders have actually paid their focus on. They've not paid their focus on USD crosses so much, or Australian crosses, or the other crosses, but they're paying a lot of attention to both JPY crosses and NZD crosses. So this has some implication in terms of what's going on in the economic calendar, for example, or even on the news itself. So here, for example, it is quite clear. Now, on Wednesday, December 14th, for example, we have got Japanese data, and we have got one that is in red that basically indicates that the Tankan Large Manufacturing Index is quite a volatile type indicator, or in other words, markets would actually move. It's quite high impact, high volatility when the Tankan manufacturing index has been released. So that is actually quite a high volatility, high impact data release that we need to. So that's probably why we have got volatility revolving JPY. Now here, for example, we've also got the Royal Bank of Australia's governor's low speech right there. We've also got GBP price index, consumer price index from the UK. That's categorized as high impact. But look at what's going on here later during the day is that we have got the federal interest rate decision going to be announced today. That is a really huge, really going to be increasing volatility. But then when we were at the tools, both the heat map as well as the top 10 movers, we have not seen the interest by traders and investors or even the trend on USD crosses, and neither did we actually see it on the other currencies except for New Zealand crosses and the JPY crosses. Now we have got confirmation that there will be quite high volatility with the JPY and also NZD because of the economic calendar. We have got some red bars indicating high impact economic data releases coming out of Japan as well as coming out of New Zealand. So again, this is a confirmation that we should be focusing on picking out JPY crosses and NZD crosses still, and we can always do a trend analysis on our own, and that way we would actually be reducing our risk, but we will be increasing our probability in our analysis and research. The way that we are doing it would actually be communicating to ourselves as traders that we are actually following the flow of investors, large investors, traders, and also people in the market that are actually controlling the market, creating trends. So we are actually riding on what they are actually moving. That would actually be a better way of dealing with the market, because the market as it is really very risky, but it's not us that controls the market. We've got all the big boys, we've got various other factors that would actually be moving the market. So it's only best for us to actually ride along, not to think that we have control over the trend in the market. Okay, I hope that makes sense for all of you. If you guys have got any questions, feel free to just click onto that little box and ask me questions. Okay, questions? Any questions so far? So we've gone through a little bit onto some of the steps, especially step 1, but step 2 itself is usually a personal one-to-one with a coach or your mentor, myself for example, or your mentors, where we would actually be talking to you about your risk analysis, your capital risk and money management. How do you actually calculate to know simple formulas on knowing how to open a trade with what is the best ideal position size? Is it 1 lot? Is it half a lot? Is it 10 cents per pip? Is it 5 cents per pip? 1 cent per pip? Things like that. It all depends on your capitalization and your own risk appetite as well. Okay, so there you go. Now, we've done that side of it. So what we can actually then do now is to look into a little bit of news, a bit of insights by myself. Insiders information, that's step 3, right? So then we want to actually go on to looking at various sites like daily FX, also action Forex is possible, but we've got one right here. It's called forexmirror.net, and usually with the $10 Academy's platform as well, they have got the forexmirror.net. Actually sort of serving them as the mainstream news. So it collects all the mainstream news that are for traders, especially like us, to actually consider, understanding where the sentiments are based on all these news, especially headlines. Now we have got, it says here, Euro CHF pullback. We have got Euro CHF making a turn, for example. This is what it means. We have got gold bulls look exhausted. That basically means buyers are getting exhausted in terms of gold. So we want to also know through headlines as well. What's been going on with gold? What's been going on with other currencies which are dominating the market at the moment? What are the clearest trend? What are the reversals going on now? All these little headlines especially will give you a little bit of an edge in understanding a little bit on trend overall for various type of currency pairs or instruments. This is really very important for us to understand. Okay, so there you go. So we have got various other sites as well. Now if it is on the daily effects, we can actually see the highlighted here. It says trading the London session guide, but this is not really breaking news. Well, we've got breaking news here, for example, GBP breaking news, UK inflation declines. So the inflation declines. So that does also then impact GBP crosses that has been going up to also decline, beating estimates. So GBP USD dips. So dips meaning it's doing the plunge to go to the downside. But whether or not it is focused on the top 10 movers, it's not really something that's been focused on, but we can always look into the trend analysis using the heat map as well. So here, for example, if we were to look at GBP, we don't really have a sort of uniformed color, more blues, and then we've got dark blues column. We've got a bit of a mixed bag, mixed colors at this moment of time, and that mix is actually reflecting the mixing trend as well. So maybe we would need to wait for the US to open, the US session to open, and only then we would get more momentum in the market to clarify the trend as well for us. Any questions from you guys, from girls and boys? Any questions at all? No questions? So far clear? Okay. Now, looking at this, GBP wouldn't be a pair, or wouldn't be crosses that I would consider connecting with GBP at this stage, because we've got too many mixed colors. But JPY, as it has been mentioned in the top 10 movers, will probably be good. So JPY crosses and USD crosses is all mixed bag as well. JPY crosses is probably the clearest one at this moment of time, and we can always look at JPY crosses. Okay, now also there's a very nice tool called the volatility chart. So if we are actually fixed or have fixed our mind onto knowing, I think I've missed out a question. No questions. Okay, thank you, lovely. All right, if any one of you have got questions, simply ask. Okay. So we have got volatility charts right there, and because we picked out JPY, let's say, now we can always click onto the 4-hour and the daily just to look at JPY. If it were to actually be matched with another currency, which currency would make it very volatile? So that answer goes to CAD. So CAD JPY seem to be highest in terms of its volatility on the daily chart because of the purple line, and because of that what do you call that, the edge here is closest to CAD, a very sharp edge closer to the edge of that whole I think it's a hexagon, and that basically means that the JPY is most volatile against the CAD. So what we can actually then do is to combine CAD and NZD to look at whether or not it's got a clear trend as well, whether or not we've got some opportunity. So this is where I would then go onto the chart. So I wouldn't actually go straight jumping onto the chart doing a technical analysis unless or until I'm actually sure of the sentiments in the market giving me an idea of which pair could I actually be choosing first. Okay, so then once we've actually gone on to here, onto the chart itself, we can then do a trend analysis on that one particular pair first, because CAD JPY could be correlated to another 3 to 5 to 7 other currency pairs that you can actually then do a trend analysis and technical analysis on all these other pairs that are correlated to the CAD JPY. So we can always start off with one, and that one is CAD JPY at this moment of time, let's say, for example, for today. And with that, I'll be able to find all the other pairs that could possibly be either positively or negatively correlated to CAD JPY, giving me more choices to actually trade other pairs as well. But most importantly, to trade and pick the right pair, meaning the right pair that are actually moving higher in volatility, in liquidity as well, because you don't want to be picking a pair that has not been moved by the market and to actually be on a consolidation or having a risk of consolidating. Then for those trend traders especially, would actually be very risky to enter the market then. Okay, so MZD-CAD is right here. Now we drag that across. So here, for example, we've got various techniques once we have gone on to the chart itself, but we don't do I usually don't do a technical analysis straight away. What I do is a trend analysis. So this is how I produce my signals as well. So I'm going to be showing you how I do a trend analysis first. So the trend analysis always consists of 3 lines on the chart, and I do a trend analysis based on 3 consecutive time frames. So all you need are these 3 lines. Now, 3 lines right here, it's really important for us. These are your 50, 100, and 200 exponential moving average. Okay, so once again, they are the 50, 100, 200 exponential moving average. So we start off with the 1 hour chart, and then we go on to the 4 hour and the daily, just to look at whether or not we have got all these candles and current price, are they actually above all the 3 lines? And the 3 lines needs to be moving in the same direction as the candles as well. So if all the candles are moving higher up, higher highs and higher lows going upwards, then 3 candles needs to be separated from each other, the 3 lines, sorry, and they have to be pointing up towards the sky as well in order to indicate to us an uptrend. So here, for example, it looks like an uptrend with the 3 lines moving upwards, a lot of higher highs, higher lows, for example. But then what's happening right now is it's not really a very clear trend as the price is coming straight and into the 3 lines. That's not a good sign. That means that it's got a little bit of a weakness in the buying. But then we can always compare and look at 4 hour chart. Now, on the 4 hour chart, we have got candles, moving up in a very good angle to the upside. We've got 3 lines pointing upwards. So it's an uptrend on the 4 hour chart. So what that means as well is that we have got a sort of a clear indication of buyers coming in wanting to push prices up anywhere between 1 hour and 4 hour chart, 4 hours time. Mainly that is because we're looking at the 4 hour chart. So because you're looking at the 4 hour chart, that basically means one time frame before is your 1 hour. So 1 hour to 4 hour is that gap that the prices could actually be moving up and down, or favorably to the upside as well. But we need to actually measure the strength of the trend using the ADX as well. So I'll cover that in our next session on how you actually identify the strength of the current trend at this moment of time. Okay, so when we move on to the daily chart, it looks like it's really strong to the upside in terms of the candles. Only the candles are moving like a 12 o'clock angle, really very strong, but the 3 lines are entangled to one another. Now, if you've got an entanglement or touching one another of these lines, that basically means that uptrend that we're looking at on NZD-CAD is most probably going to be weakening. So we've only got maybe perhaps from 1 hour to 4 hours time, some potential in buying, but not really for the longer term, more than 4 hours time. So that is basically how you actually do a trend analysis. So then it would actually help you understand that you've got some limited time for you to actually buy if you do want to, but it is actually quite risky because if you have got all 3 time frames showing the same thing and showing you uptrend that is really clear, the 3 lines are moving upwards, all the candles are above. If you've got that all in 3 time frame, then you are safer to actually enter the trade and start doing technical analysis and then to actually buy that pair. But in this case, it does look like I've got a bit of a limited time to actually consider riskily to actually enter the market for a buy. So hence the reason you can see that you've got, candlestick pattern itself is showing you a wick that is high up there on the daily chart. That basically means that the body has actually reached that point and then weakened. So the buying what do you call that, energy or the buying momentum has actually weakened at this moment of time. So we may be experiencing a little bit of a correction at this moment of time. So it's not really very advisable, or it would actually be high risk to actually enter the market if you're considering buying it at this moment of time. Okay, also because we're looking at the price at 0.8732, and 32 has actually gone under the 50 psychological level as well. So that does actually tell me that we have got some other reversal areas that are very close to the current price. So this is where I think it's very risky to actually buy. Yes, you guys have got questions? Hi. Yeah. Okay. I'll just mute you guys. Okay. All right, because I think it was unmuted, so I've muted you guys back. Okay. All right, so there you go. So this is basically how I would actually be trading and picking the right pair. And at this stage, I don't see NZD CAD, being a good pair to enter for the buy. Of course, we have got, within 1 to 4 hours time, we have got some buying potential momentum as well. But I think it is actually quite risky to look into buying. I would think that it would need some time for it to go up to 8750 and go above 8750 first, in order for us to then consider whether or not the buyers are coming back. At this moment of time, there is a chance of a reversal in NZD CAD. So if traders were not to actually do this kind of analysis or research from step 1 to step 5, they would then be caught up into a buy, and then they would be tempted to actually buy at this timing, and this timing would actually be quite wrong to actually enter into buying the NZD CAD at this moment of time. Okay, so we've also got bearish candles, mother candles as well, that indicates that it's got some momentum to fall, maybe for a short period of time before it picks up again. So this is basically how we do a trend analysis first before we proceed in doing a technical analysis. Okay, so here, for example, I would like to also share something that we can always do is price patterns. We've got various type of patterns. I've got my own geometric patterns, for example, but we've also got harmonic patterns, chart patterns, and during the years, I've actually developed the skills of spotting patterns. Now, I just want to share with you on something that I have spotted right here, right now, at this moment of time, on NZD-JPY. So we have got a Z-like, we call it a lazy Z pattern, okay? And I will draw that for you in order for you to understand what I mean by it. So we've got a pattern that starts off with A to B right here, okay? Then what happens is if you double up this movement and you double it up there, this is how high prices could have gone, but it didn't actually go right up here, right? So, but it went here instead. So that basically means that maybe it's doing a little bit of a reversal, and then it might go up a little bit more, but it might go up to the 0.49884 area. Okay, so what that also means is that if it does actually go up to that area, there is a potential for it to reverse and come down to this area right here. Okay, so I'll proceed in drawing the B to C line. So that is the B to C line right there. Okay, so I'll just draw it up here, and I'll move this one right there. So this maps out a potential sort of route that it could potentially take. So that basically means that, okay, there may be a little bit of a room to go up, but not just yet. It's doing a bit of a correction. And if it does do a bit of a correction and the uptrend moves up, it might actually go up and has the potential to go up after the correction to 0.8884 area, right? So if once it actually does that there and then starts to reverse, and if it does reverse, then it would actually solidify this fall from C right down to D. And that C to D is usually the same length, the same number of candles as well as A to B right here. So that basically means that, you know, we could be guiding traders to actually start selling once it actually goes up and goes to that point and reverse. There may be a very big, nice fall, like an ABCD type pattern to come downwards. And that could actually be a nice falling of the NZD-CAD. So we can only witness that on a real life market, and then we can actually take it from there on other sessions, especially on Friday as well, whether or not the market would actually reverse at that point at 0.8884 area or 85. Okay, so this is just one of the ways in using price patterns. We've also got the geometric patterns that I will talk to you about it much more when we actually manage to spot some patterns. But based on some very popular demand from traders, we would like to take a look at gold prices as well first before we actually end the session for today. But of course, if you guys have got any questions, feel free to ask, and I will go on to the market watch right here and switch what I see to the XAU slash USD or gold versus the US dollar. So here I would like to also give you a little bit of an indication of potential geometric patterns that are possibly working in the market at this moment of time. So here, for example, I'll give you a little bit of a hint. On the downward market, we have a bearish ABCD pattern right here. Give me a second. Not here, but here. A to AB right here. Usually it's got, if it's done properly, we have got the potential of predicting the market just by having a parallel line. We call it quadrilaterals, which basically means that AB's length is similar to the CD's length in order for you to actually predict where the market could fall here. So here, for example, we had a sell on gold at some point and managed to trade that C to D leg right here. And this is how a geometric pattern is actually drawn by the ABCD pattern first. So AB equals CD, and then that could actually then help you predict where the market could actually fall. You see, so it fell, it reversed very close to that red line, but there are ways to actually look at where we could actually reverse before that red line that's been predicted. Okay, so here, this is just an ABCD pattern, but then to convert it into a geometric pattern, you need to draw a line like this right here. Okay, so once we've drawn that, then we have got a cross area, which I call it the centroid. When we have got a centroid, that basically is an area that we can actually mark as your entry level. So I mark my entry in selling from that point right to this area roughly before, before considering where to buy, where to sell. I use the pattern to actually know where it could actually fall to, which is your take profit area, but also to actually enter the market on a sell at that rate area at the very top. Under that rate line, we sell all the way through, and then there are ways to actually look at where the reversal could potentially happen as well. Okay, we'll cover that a lot more in our next sessions. So here I have got, give me a second, an indication right here on where it would actually be good to exit, which is the opening price of that mother candle right there. And that was where it sort of reversed as well. As you can see, reversed exactly on the dot on that second line that I've just drawn as well. So that would probably be where I would be exiting as well, just about the area of where it actually reversed. So the accuracy of geometric patterns as well, when they are strong trends, are about 70+% accuracy as well. So there's a lot to gather from geometric patterns, psychological numbers as well, and various other strategies in order to help you to increase your probability and produce more signals that are high in probability and low in risk as well. Okay, I hope you guys have questions. Any questions so far? If not, then we'll end the session for today. But it's been, I think, a educational type of session, and you've got the geometric patterns discussed together with how to pick the right pair and psychological levels as well, and most importantly, the PRICE trade plan. Okay, questions? No questions? Perhaps any pairs that you'll be interested in, Miss Lovely? Perhaps you have any questions, or would you like to take a look at any pairs that you are currently trading or thinking of trading? No questions. Okay. If no questions, we shall end the session for today. Let me just scout the market a little bit. Looks like GBP USD has got a flag, pole and flag type pattern, but also a ABCD type pattern to the upside. The same goes for gold as well on the daily chart. We've got various ABCD pattern to the upside. But at this moment of time on the daily chart for gold, the current price at 1808 or 1800s is quite a risky level, as it is also a very strong or strongish type, what do you call that, resistant level. So it would probably be wiser to let the price go up a little bit more before we actually decide to actually buy, perhaps at a certain level like the 1815 and above. So maybe to give it a little bit of room to go up first, just to ascertain and be sure that it is definitely, you know, having more interest by the buyers to actually go up. Because here, for example, on the weekly chart itself, we have got an area at 1753. At this moment of time, no, it's already gone beyond that. Give me a second. Made a mistake. Yes, we've got some buying interest at 1808 as well, but at the same time, we've got some resistance level in that area too. So it's probably best for us to wait a little bit until it goes at 1810 or 1815 at least. Then it will give us a little bit more momentum. It does also depend on what's going on in the market, risk appetite, risk off, risk on type mode as well. But at this moment of time, it looks like it's picking up quite well, but this is on the weekly chart. Now, as we go on to the hourly chart for gold, it looks like it's got some interest in the sell side of it. On the 1 hour chart, it's actually at an area that it's got some corrective move to the downside. If, for example, anywhere between 1 to 4 hours time, if it does actually fall further and goes, I would say, at the 1805 and below, then it would actually be giving us more interest by sellers, and that would actually be a better or ideal time for us to actually look at selling. But a better, more ideal, safer price to look at selling is under the 1800. So if it does, because that would be the 1800 is a very, very significant or high profile support and resistance level. Okay, so it's very significant level. So it needs to go under the 1800 perfectly and safely first before it actually gives us any sort of indication of doing anything. All right. Okay, so that's basically it. And that is for gold. So we want to be safe and not rush into the trading side of it. We've got definitely an area to sell starting at the Let me just check this one out. 1807 and under, but I think to be safe, it will probably be better at 1800 and below, because 1800 could easily be a support area. So it's not an ideal time to buy or sell at this moment of time with the current price, but it's probably best for us as traders to actually wait a little bit to look at whether or not it's got more, room to actually go down more under the 1800 and under. Also because on the 4-hour chart, it's got this very large wick, giving us signals of weakening to the upside as well. Okay. All right. Question. Very good. What does a flag pattern on GBP USD signify? That's a very good question, Solomon. Let's go to GBP USD. Now, it depends on, we've got the upside down flagpole pattern. This flagpole pattern, this is the pole basically right here. And then the flag is, on a downside channel. So that basically signifies that there are more room for it to actually go up more. But this is what we see on the 1-hour chart in terms of the trend. It's got some bias to the upside for GBP USD. Let's move on to the 4-hour chart and look at what's happening there. Now, it does actually look like it's got some room to the upside for GBP USD. Maybe from 30 minutes right to the 4-hour chart, but not more than the 4-hour chart, not higher than the 4-hour chart for the upside. So what that means is that anywhere between 1 hour to 4 hours time, perhaps we might find some buying opportunity, but not beyond that. So let's look at the flagpole pattern again on the 1-hour chart. So that here, for example, if we were to zoom out a little bit, first, we look at a pole. It could actually be that single, pole there, but then usually if you take it from that low that is closest right up, that could actually be the whole pole right there. And now your flag side of it would actually be best if you use a channel right there, okay? So you just basically mark that area of channel right there, the channel of how price have actually, moved downwards in that downward type channel, and then it broke out from that channel, and then it's giving us some potential signals to the upside movement based on just the pattern and flagpole. But based on the trend at this moment of time and how the candles have actually been moving, we may see a little bit of room on the 1-hour chart, but we need to watch out for this area. The closing price of this mother candle right here is at was at 1.2410 area. So that basically means it's probably best to exit at 1.2410 and under, just because it may actually be an area of resistance, okay? And it might actually signal some potential reversal as well. So here as well, this is the other thing. The other reversal area is here at this area right here. Let's see. That's the 1.2420 psychological level as well. So anywhere between 1.2410 right up to 1.2420 is a significant reversal area. So if you're already buying, for example, it's probably best to consider exiting first before prices touch either one of the prices there, 1.2410 and 1.2420. Okay, so it's a reversal area right there. So I would think that it's probably best to exit first and then re-enter the market at 1.2430 onwards. So not anything before that, because that would actually be quite risky to do. So on the 4-hour chart as well, we see that on the GBP USD, on the current price itself, let's just do a bit of an analysis on there. Yeah, we don't actually have a lot of power by previous mother candles on the bullish side of it, but we have got more power of selling and dropping of prices for GBP USD. So this is where we need to be careful and see to take a look at the current price position, whether or not this is an area of resistance or not. Okay, so 4 hour, let's say if it is 4 hour right here, I just want to look at the chances of a reversal based on the average directional movement index right there. Okay, so we have got the average directional movement index with the level 25 added on. On the 4 hour, it looks like it's got more room to the upside, okay, because of that blue line above the level 25. So there's definitely more strength for pushing the pound versus the dollar upwards, but it is important for us to look at whether or not we have got a divergence based on stochastics. So we can always insert the stochastics indicator in order for us to know whether or not a reversal is coming soon or not. Okay, so we don't need to change the parameters. I just want to look at opposites at this moment of time. Now here it looks quite clear that we have got a divergence between, let's say we're looking at this peak right here or around this area, right up to that peak right there, right? But here, for example, it's a downward slope as opposed to an upward slope. So that upward slope on candle is quite the opposite of what we see on the stochastic. So that does actually tell me that we have got a bit of a resistance, a bit of a mismatch or divergence, which signals a reversal potential. So let's look at the daily chart as well. Now the daily chart is the same. If I zoom in here a little bit, okay, and you can see that that is the high area, let's say roughly, and from there to the next high is an upward slope, so we've got a higher high. But when we go on to this same area or similar area right here, and we see that to the current price and from the peak area, it looks like a downward type slope as well. So that does again tell us that we may have a reversal coming up for the pound versus the dollar. Okay. All right. So there you go. That's I hope that's been helpful, Solomon. If that answered your question at all. It's good. Any other questions before we end the session? All good? Okay. Brilliant. Okay, guys. So, guys and girls, so I would like to thank you for your time for attending my webinar today, and we'll see you guys again, guys and girls. See you all on Friday, same time, and we shall then be more active in looking at more signals as well. So I'll be preparing these signals and launching it in groups as well, so traders could actually benefit from signals that we produce on a daily basis. All right, lovely to have you, lovely. Thank you very much for the new ones that have actually attended my webinar today. All right, good, thank you. Yes, please feel free to join me again, lovely, and we shall then meet every week, three times a week on Mondays, Wednesdays, and Fridays. So you would be getting the link as well from your account managers or the team leaders, and they'll be happy to pass on the links to you guys. Okay, take care. Thank you so much, everyone. Have a lovely rest of the day, and we'll see you guys again. See you all again on Friday. Take care. Bye bye for now. Happy picking.